So, of course, there's this feeling, right? It's sweeping the nation. The stock market, by the way, just one proxy of that, but I think it can be summed up, all of this, in one phrase. Just win, baby. Just win, baby. Of course, that phrase made famous by the Maverick owner of the Oakland Raiders, Al Davis. Now, here's what the story goes. That after his team won that Super Bowl, right? I mean, it was like huge. It was the most significant margin in history against the then Redskins, Washington Redskins. The league commissioner was holding up the trophy, the Lombardi trophy. Al Davis comes over, and all of a sudden, all he does is talk about the Redskins, how great the organization is. So Al Davis is getting a little upset here. Finally, the mic goes to him. It's his turn to speak. And after a long, pregnant pause and feeling somewhat slighted, Al Davis just looked at the throng of reporters and said, just win, baby. And just win is exactly what's happening to a whole lot of financial assets right now in the stock market. The Russell 2000 exploding, Bitcoin exploding, the overall market. Yes, it is the S&P, nothing else. NASDAQ rocking, gold rocking, the dollar rocking. But there are also some signs, right? The yields and some of these other things suggesting inflation may also be rocking. But the bottom line is that's what you call a just win chart. Now, of course, the public is excited for sure. Here's one thing that we haven't seen in a long time. These are inflows, nine straight days of inflows, not inflows and outflows. Inflows, it's $18 billion. By the way, this streak is your longest streak of money going into the spiders since a 10-day streak back in 2014. Oh, not to be left out, corporations went in on the fun too. Buybacks, folks, take a look at buybacks. Right now, we are on pace for the biggest year in buybacks. Probably right now we're up 17% from last year. It could be a lot more than that because the next 2 months, lots of buybacks. But then again, there are concerns, right? Because traditionalists will point to things like, well, what about the equity risk premium? It's too low. It's not worth buying stocks. Now, I got to tell you, listen, this is sort of like paint by numbers, right? Old school paint by numbers. And I understand the playbook, but maybe they have to update the playbook because this hasn't worked in a long time. You have missed this entire rally if you only went on things like this. Now, there are other problems and issues that I think we cannot ignore. Yesterday's CPI number was hotter than expected. This morning, the PPI number certainly hints of a new reality when it comes to inflation, and maybe, just maybe, a new reality at the Federal Reserve because I think they're going to have to adjust their inflation target. By the way, I still don't know how we got 2% in the first place. Now, here's the rub. According to the Bank of America, the populist influence is what's happening here, right? So this is where everything, you can see all the red here, a lot of shift from the red, from conservative to populist. Same thing up from liberal up here. So the populist movement now, they say, has accelerated the shift from the world we've been used to, like a 2% growth, low growth, but also associated with low inflation, to a world of 5% growth, which of course means higher prices and potentially, though, for the market, higher GDP and higher earnings. Joining me now, Bianco Research President Jim Bianco. And Jim, we learned yesterday, and I thought about you, that now these fund managers, the monthly fund manager survey, 33% post-election now see a chance of a no landing. My man, you're getting crowded. You were the only one there 2 months ago. There was only 14% there in October and less in September. So thinking about this new world of no landing, also with this sort of populism thing, high growth, but high also GDP, help work it out. How does that look in real time, and how does that look for financial markets?
Well, it looks great for financial markets, and your rundown was spot on. Everybody is now looking at November 5th as being a phase shift towards higher growth, higher nominal growth. And the question is, if it is, and everybody's rushing to it, and it might be, what's the counterbalance to all of this? What do we have to look for that could potentially halt it? And the answer is inflation. And the answer is higher interest rates. And we're seeing both of those right now between, as you mentioned, PPI and CPI, and with the 10-year yield going up. So as we rush into stocks and as we rush into crypto, and as we say that the economy is going to get better, and all of that might be true, where's the price? The price might be higher interest rates because we're looking at potentially more inflation.
When you think about some of the old school ways of measuring markets, certainly equity risk premium is something that all institutions understand, a lot of folks use. At this level, you wouldn't be buying the market, but you could argue that for a long time you probably wouldn't have been buying this market. Does Wall Street maybe have to readjust the way it looks at the investment opportunities in this new environment?
Oh, I think it does. I mean, all of these rules, whether it's equity risk premium in the bond market, term premium, the Fed model, a lot of these rules that we've used in the past, even like what is the appropriate PE ratio, these are all valuation rules. And maybe they're telling us the stock market's overvalued. Okay, sure. But it could stay overvalued for a couple of decades, as you've pointed out, or it could stay undervalued for a couple of decades and not rally like you think. So I think there's a real rationality that needs to come in and say there are valuation tools and then there are timing tools, and don't confuse the two. If the equity risk premium is saying that it's turning against the stock market more towards the bond market, which is what it would mean, that might be technically true for that tool, but it still might be years before you start to see that manifest in the way that the markets trade.
Right. And speaking of new rules or new toolboxes, so to speak, the Federal Reserve, again, are they working off a sort of an antiquated assumption with this steadfast 2% inflation rule? Would they have to adjust it? And by the way, could they do it internally, like a de facto adjustment, without ever having to admit to the public they've changed?
Well, let's be fair. The Fed made up the 2% number. We all know that they did. They just invented it about 12 years ago. The problem that the Fed has is, let's go back to May of 22. Joe Biden, the president, looked at Jay Powell in their one and only public meeting and pointed at him and said, America, this is a guy who's going to fix inflation. And Jay Powell has said at every meeting, we're committed to fixing inflation and bringing it back to 2%. So if he comes out now and says, no, now it's 3%, especially after Donald Trump got elected, no, now we're going to, change the forecast and admit we can't get control of inflation, it would not look very well from an institution that is very political. So yeah, is it a made up number? Yes, but they've painted themselves into the corner with this number, and they've got a difficult road to hoe with it.
All right. Hey, I got to get your thoughts quickly on crypto. By the way, I love your all the tweets and stuff, the X post on Odell Beckham, but more of a tax conversation probably. But I want to get to you on that later. But the crypto movement obviously is absolutely on fire. You've been involved with this and a positive observer of this from the very beginning. How do you feel now that the bandwagon is getting a little crowded?
It's a little bit worrisome because it's going to make it harder for development because of the higher prices. But you're right. Crypto was viewed as a partisan coin, and the right partisan won. And now there's the hope that there's going to be deregulation. There's going to be more crypto reserve funds coming. Governments are going to start buying it. They're going to be open to it. Maybe you could pay your taxes with it. And this is all what's been driving it higher. I think some of that's going to probably happen, and some of this move is justified. But it's also the crypto space. What does it do? It takes a good idea and way overdoes it. What does it do? It takes bad news and it way overdoes it. So you have to be careful of it when you're talking about the crypto space.
Yeah, you have to ride those waves if you're a believer. Jim, thank you so much, my friend. Appreciate it. Thanks a lot.
Sure.
All right. So my next guest says, hey,